Hi, Warriors. Hi, Dan. How's everyone doing? Tom, Ziggy, Witt, Theo, Terry. Everyone doing okay? I just want to point out on Friday, Blake, was talking about how the bond market was holding the markets hostage, and both Blake and I went over his falling wedge and said we had a 3-drive Friday, and we got a nice pop after our session on Friday. So over the weekend, I came to this conclusion that Steve McQueen of The Great Escape was revving up his Harley. I don't know if it was a Harley that he escaped the German POW camp in, but that was what was forecasted, and this is what's happened. Okay, so this was Friday. And early in the week, I said, look for a pullback, which was a pop in yields to 310. I think the yields only got to 308, which shows, how strong and how much compression was built up here. And now we're pushing 3%. Actually looks like we could go to 290 on the daily 50 days down here. Pretty negative week. And of course, the implications of that, as I said in the tweet, was going to be US dollar yen, which collapsed. We're back underneath the throwover. I would say that's it for the yen. You do not be long yen anymore. In fact, look to sell rallies. It's been a nice rally from 480, almost 700 pips. So why can't we at least pull back 3 from here? Would take it down towards 108. It was a triumph. Okay. I knew someone would call me on it. Thank you, Mike. So Steve McQueen escaped the POW camp in a triumph. All right, so that's what's happening. Also, the Dixie. Yesterday talked about covering short positions from last week at the 94 level in here. Yesterday in face. So here we are probing it, making new highs, big divergence on the 4-hour. See if we have it on the daily. Not really. 1 hour, we haven't quite made a new high, but I think there's going to be something here, okay? Not today, but euro maybe around 1650 or so. This could be interpreted as now we're getting a 3. If you call this 1, 2, 3. So just a guess, I think we dig in our heels within the next 40 pips or so for a reaction. And I'm looking to short the dollar again at new highs. That's why the cover was yesterday. I thought we could get new highs. And the S&Ps did an interesting thing before the sell-off today. Coming into this week, I was looking for about 27.5 or so to make new recovery highs. But this was enough. Classic stop hunt. We took out last week's highs by about less than half a point before the reversal. So looking pretty negative here. Maybe at least 2680 could turn into anything. And then I want to wrap it with this before I turn it over to the guys are live in Cyprus at the expo. And also, if you're not satisfied with your trading situation with your broker, perhaps you'd like tighter spreads, or you'd like multiple platforms, or want to avoid first in, first out, contact Trent Orr at our sponsor, Forest Park FX. It's a great place. If you can't see the forest from the park, Trent will help you do that. And then I just want to wrap it, okay, with my Turnaround Tuesday candidate yesterday. So we were here early in face. We had 1, 2, we had a pullback, and play back the recording. I said shorted at 72.80 with a $1 stop. I'm sorry I wasn't perfect. It went to 72.88. So this trade, you should at least have partial profits If you think you've missed it, you haven't. There'll be rallies. You know, if we had a bounce back towards 220, 240, I'd get on it, but we could end up with a reversal week up here. We're still higher on the week. Off number is 69.74. So I think there's going to be a lot of opportunities because I'm actually looking for at least 6.6, you know, previous highs here, 6.6, and maybe 60 in the coming weeks and months. So I'm calling this, what's the name of our Secretary of State? The Mike Pompeo crude top, saying that we're going to crush Iran. So the Mike Pompeo top in crude, of course, I could be wrong. You could have BE stops now. If you took the trade, takes all the heat off. You know, we make new highs, you get out of the way. Okay, but don't let a winner turn into a loser. You know, you should always be taking something off the table because we're traders, and the only way we get paid is it's not a profit till you take it. So you take at least a piece off so you and the family could go to Disneyland. Who wants to go to Disneyland today? Anyone? Blake was there a few weeks back. He had a great time. Where dreams also come true in face. What do you think, Michael? And these, Zia wants to go. You're in Disneyland every day? Do you work there, Gary? Or you're talking financial Disneyland? Okay, Dan is hit. Dan took his family to Disney World. I've been there too. So Blake, dollar correction was pretty short-lived. Do you think that maybe this is just one more hurrah before a larger correction in the dollar?
The dollar is really close to some pretty key resistance, but before we do that, a couple of things. First of all, I think the guys want to say hello from the IFX Expo in Cyprus. But for those of you that are you know, looking for, you know, how to contact Forest Park FX, I put the link to the reimbursement program, which their contact information is at the bottom of the of that screen. So make sure that you check that out. You know, it doesn't matter where you reside if you're just not happy with your broker and what they're giving you. Make sure you talk to Trent or Justin there at Forest Park. They can help you out. Now the guys in Cyprus, are you guys here? I know they want to say hello really fast.
Hello.
Hey. Hey guys.
Hey, can you see us? Hello.
No, we can't. We'd have to flip it over to you, I guess.
Give me a second. Hold on. Give me a second.
Here. It's coming over to you.
Yep. We're here.
Yep. Oh yeah, we can see you guys. Yep.
Your finger.
Hey guys.
Oh yeah. How you doing?
Hey. Hello guys.
I think Greg had just said hello too.
Yes, I'm here.
Let me show you the IFX Expo. There it is. We are exactly above it at the moment. So, hi from here.
What a good-looking couple.
Don't tell my wife though, or his wife.
So do you really have your sunglasses on inside?
Sorry, what, mate?
He doesn't want to be discovered.
Sunglasses on inside.
Actually, you know something? It's because this is the last thing we're doing, and we're on our way outside already. And these are glasses for me to also see, because I'm short-sighted.
Oh, I got it. Okay,
yeah.
I was just thinking you're that cool. All right.
No, so we were already done with our first pass today, and you know we're going to be here tomorrow as well to follow up with some leads. So you know we just want to contact you to say hi from Cyprus and wish you a nice webinar.
Great. Well, glad you guys made it there safe, and hope you guys are having a great time meeting other people in the community in the industry.
Yeah,
It's very interesting. There's quite a lot of people here, so it's definitely interesting. Yes.
indeed. So enjoy the rest of the interview, and we'll see you tomorrow.
How did the chicks look there, guys? The chicks.
No comment. No comment.
No comment.
Oh, your wives may be watching. Okay.
Oh yeah.
All right, guys. Good luck
All right.
there.
Okay.
All right, guys. I'm going to take over here.
Bye-bye.
Bye-bye. Take care. All right, and Greg, I know you're here right now, and Greg, are you there?
Yes.
Okay. Hey, how's it going? Let me just cover a couple of quick things before I hand it over to you. This is as you can, as you probably can tell, we're seeing a really massive move overnight. Just some real big moves in the FX market, and the dollar index is relentless. I mean, obviously minus the yen, the dollar index is just making a really big move. The dollar index itself, we have to realize that we're coming up to a 38% retracement, which is the 94.75 level, which is equivalent to the euro dollar where we're at right now, which I'll go into here in a second. But as you can see, the dollar index is stretching its legs. The RSI is very divergent. So if you're long the dollar in any way, shape, or form, you got to be a little careful as we approach this resistance. I wouldn't be surprised if the dollar index makes one more stab higher to this resistance here. Whoops. And then shows us a reversal. That's what I would be thinking. Now, as far as the euro dollar goes, I'm going to pull up the euro dollar on a cleaner chart because I have a messier chart that I work on normally, but I wanted to pull up a different feed to give you guys a kind of view of what I'm seeing. This is the euro dollar in a descending wedge. Really strong descending wedge into key 38% retracement support. Now I know that support comes in at 117.10, roughly, just a few pips from where we're at. You have to realize when you're dealing with a daily chart or a weekly chart, you can be above or below support or resistance by 30, 40 pips, and it's really, you can still say it respected it. I mean, we could drop another 30 or 40 pips and bounce back, and by the end of the day, we're going to say, the euro dollar respected this support. So, realize that we are in proximity of some very critical support levels, especially when you're talking about, horizontal support here. You got the 38% retracement. Yes, we're slightly below it right now, but we're all within the same vicinity, and that's pretty key to understand. Now, if you look at like the cable also hit 161% extension of this double top or last extension. We are way oversold here. The pound is at risk of bouncing as well. So what am I trying to point out here is the dollar may be making new highs, but the risk is for a bounce, or a bounce in the euro, bounce in the cable, pull back in the dollar. That is the risk at these prices. Plus, sentiment is very extreme at this point. So I would not be trying to short the euro down here. I would not be trying to short the pound down here. Does that mean you should be trading counter trend and getting long? Oh, that's up to you. If you want to take a small position and you want to do that, just keep your stops tight. We've all seen moves where oversold can be more oversolder, or and here's the euro. This is the by the way, I am looking just from Andre, if he's, I don't know if he's listening in, but this is a butterfly pattern. If we can make it all the way down to once, I was hoping we get down to 116.85 to complete a butterfly pattern. But anyway, I don't know if the euro is going to do that or not. But we're at those types of levels where things are getting very extreme. Notice also the Aussie. It's not hitting new trend lows, nor is the Kiwi dollar. The Kiwi dollar is not hitting new trend lows. I'm not factoring in the Canadian into anything that I'm thinking because of the NAFTA negotiations that are ongoing. But we are challenging. Like if you want to just say, this is resistance. This is shoot. Hold on. This is support. Okay, that's resistance as before. So if you're trading long the dollar Canadian, you got to be careful up here. We failed up here multiple times over the course of the last several weeks. So I wouldn't be long the dollar Canadian up here if I was trading it, which I'm not. I'm just saying that because of the multiple failures up here, it would be, and knowing where the dollar's at in general, I would be very nervous about trying to be long the dollar Canadian here, unless it was some news, NAFTA news driven event. Also the dollar Swiss, you can see this is a pretty classic risk off move. You're seeing stronger Swiss, weaker euro, which is the euro Swiss is weakening completely. The dollar Swiss I'm still looking for, as I had drawn out for you many times. I don't know why it's not staying in drawing mode, but I have to fix that. Oh, here, wait. Stay in drawing mode. There we go. Expecting a move down to 98.50, but we're getting oversold here. So, the dollar Swiss could bounce. And what the better play is probably, and I'm not long this, but this is probably the better play, is just to get long at some dollar Swiss on a bounce, just for a near-term scalp type of thing. That's a setup there. US dollar Swedish krona, US dollar Norwegian krona are not following through to the upside, so that's another warning that the euro downside might be limited. And the last but not least, I just want to talk about bonds. And Grega, I'm really interested to hear what your outlook in the bond market is. The bond market is, and let me just finish what I'm saying, then I'll let you talk a little bit or answer that question. The bond market, we were expecting a reversal after we hit new lows. If you go back, for those of you that don't believe what Dale and I was saying, go back and listen 2 weeks ago when we were here. We were here, and I'm like, we're in a descending wedge. Dale said, hey, I'm expecting one more move lower to the bottom of that wedge. Then we get a reversal. We hit the bottom of the wedge, we hit a reversal, we squeezed through this support. You can see this previous support, current resistance. I tweeted it last night. I said, hey, if we go through here, the bond market goes through here, yields are gonna fall like crazy. And that's what had happened. If you look at the 10-year yield, the 10-year yield crapped the bed, and we're actually on channel support right now where the yields are. But we totally got smashed, and every yen pair got destroyed. And Grega, what I noticed here is you and I don't know when you put in your pattern in play, but late evening, I wasn't even looking at yours. I put in a pattern in play 10 hours ago. You put in a pattern in play in the pound yen. Must have been yesterday during the day, and I didn't even notice that you'd put one in too.
It was actually last week on Thursday, I think.
Oh, is it last week?
Yes. When I see
it is the 17th. Yeah, okay. Now, every yen pair has completely just got destroyed. I'm looking at a bear flag formation. So you must have got in somewhere around here. But man, that is disgusting looking, right? I mean, the pound yen looks like it can drop. But let me stop before I get too far. Going back into the bond market, how do you feel about the 10-year here? Because this is a big deal. I mean, if the 10-year bond market, remember the market is, the market's been playing the short side of the bond market. I actually think that bonds, due to risk aversion this time of year, we could actually spike back up towards 122.
Yes,
is what I'm thinking.
I'm looking exactly at the same level, 121 to 122. It's also the wave 4 swing high back from April. You have there. So actually, that's back from April swing high that you have.
So let me, if you don't mind, I'm going to flip it over to you just so, because I really do want to see what you're looking at. Is that all right?
Yeah, sure, of course. That's why I'm here.
Okay. Yeah, all right. I really want to hear what I think this is because I think this is such a big deal to the FX market. I think it's important that you guys get all these views in the bond market. Okay, well that's a big monthly chart I can see there on your AB. Wow.
Yes. Actually, wow. What really matters to me at this stage is that here we are at this channel support. Okay, so there's still a free wave decline. It actually can become more extended to weakness, but what really catch my eye and what really matters to me at this stage is that on a daily time frame, we can count 5 waves of decline, okay, from September 2017 highs. You see waves 1, 2, nice extended wave 3, wave 4, and wave 5. Notice that wave 5 is equal to wave 1 in distance, almost on tick, okay, before market turn to the upside. Also, if you will zoom this in, you can see 5 subwaves, if I level this, within wave 5.
Wow.
Okay, so actually everything perfectly matched up here, technically speaking. So actually I would be looking for minimum free wave recovery. I don't know if market will turn impulsively higher, but definitely it's turning higher. So at least 3 waves should be seen. So what I'm looking at is for an ABC retracement back to these April highs, as I said. Okay, so which means that there is room for much more gains here. And as you said, dollar yen and some of dollar pairs are actually not confirming current dollar strength, right? So euro dollar, for example, is moving lower, but dollar yen is also moving to the downside. So what I think it may happen is that euro dollar could find some kind of a base, while dollar yen may extend even lower, while these 10-year US notes are moving to the upside, because we said there's room for much more gains here because we anticipate ABC recovery. And as you can see, dollar yen broke this interesting bullish channel, which means that there's a room for much more weakness. And on dollar yen, I'm actually seeing room for, let me just switch to dollar yen. Dollar yen, you can see it also breaking this trendline support connected from March. So technically speaking, we could be in wave E here. Okay, this is a wave E pullback that I'm expecting, and ideally this wave E will retrace back into this consolidation that we have seen back in April. So that's around 107. So now imagine where those yen crosses could fall further if we consider that there are still actually some very weak currencies like pound, which fell after worse than expected CPI numbers. We have seen also stocks turning to the downside quite aggressively, especially on DAX, which shows evidences of a temporary high in place. So what I see is more risk-off trades, which means that Japanese yen could really hold its beat here.
Wow, you know, it's interesting. The DAX, if you are a ForexAnalytix subscriber, and I did the analysis in the DAX last night, and we've been looking. Well, I've been doing it for the last week actually, because these guys have been on their way to traveling and preparing to travel. So all the basic technical analysis I've been doing, I've been looking for 13,200 in the DAX because it was a confluence of 161% extension, 78% retracement, and I said we're going to turn lower as a result, and man, did we turn lower. I mean, it is completely destroyed.
It's really interesting how your different interpretation, right, and my wave count came together exactly with the same levels here.
Yeah.
200.
And that's what you'd say, and I'm sure you'd probably agree with me. This is the power of ForexAnalytix. When you look at multiple forms of analysis and you go, oh wow, it all matches. It all lines up. So
yes, and actually at the moment, as you can see on this picture, this aggressive sell-off that just occurred today. I mean, if we stay bearish here and close below this channel support line, then again we can retrace all the way back to this wave 4 levels. So which means there is room for much more weakness, and clearly this first leg here on the hourly chart, as you can see, is definitely an impulse, right? and an impulse tells us where is current strong price direction, and clearly this is to the downside. So what I would be watching personally is that maybe we find some support here down there at the former wave 4, and we get a free wave rally from there, and then watch out for more weakness after ABC recovery. Okay, resistance would be probably around 13,000. It's also psychological level, and as you can see, this 13,000 or around there was this previous swing high here from May 10, and also swing low here. We broke this swing low very decisively, so this previous support could now turn into resistance once we, if we get a bounce in free waves here. So definitely stocks are not looking good, and also we haven't seen any. We have seen quite mixed price action on stocks. Okay, there were not stocks looking globally. There were not every stocks trading to the upside in the last month in the same degree of strength. Okay, some were lagging a bit, some were very strong. So to me, that's not sign of a healthy market, but rather it was sign of a potential turn, which is probably already happening now.
Right. So, you know, with all this, this, you know, potential setup reversals and the stock market, and you know, what we're seeing in the dollar and bonds, how do you see precious metals right now, Grega?
I think that some would expect, with current strong dollar against the euro, it would think, and especially weak Aussie, it would think that gold would probably be lower as well, much lower, right, at the moment, at least today, but it's not. So it's probably because stocks are also trading to the downside while the euro dollar is trading lower. So it looks like that some money went into the metals. So if stocks will continue to move lower, I think that metals could at least be sideways here or even bullish. I'm expecting potential recovery, a bigger one here on gold, because we are at this trend line support connected from 2016 December lows. So it could be a time for a bounce, but for now, this recovery from recent low from Monday actually did not convince me. So I need something more aggressive to the upside to say that gold has bottomed and that we are going higher, and maybe looking for, maybe even for some long ideas. So that being said, I really have to see prices breaking above this channel resistance to confirm that we are headed higher. But as it stands right now, I really think that either we see move to the upside on gold, or we just stay sideways. I don't think that we will see any more aggressive sell-off if stocks will continue to.
Right. Yeah, I'd agree with that. You know, I've been asking you a lot of questions this morning, and I'm sure you came here with like ideas of things that you wanted to cover specifically. What's on your radar aside from what we've been talking about this far?
Actually, I want to update on pound yen, because pound yen made a very aggressive move to the downside. But if you look at intraday hourly chart here, then you would probably think, okay, this is done now. We are in an extended leg down. We are oversold. We will get a bounce. But you really have to see and observe the bigger picture. And the bigger picture shows that we are actually still trading above this 145 or around their March low. Okay, and since we see a completed wave 1 or wave A, and then wave B or wave 2, we don't know that if we are maybe in a wave 3 or wave C, but in both cases, there is room for even 142, which means another 400 pips room for more weakness. Okay, so if those who are short, they really should be maybe aware that there is possibility to see much more extended leg to the downside. So I think that pullbacks could still be very interesting. I'm waiting on this, and we'll be watching this wave 4 that may occur in the next 24 to 48 hours, and watch out for potential resistance then to hold around 147. It was previous swing low. So that's where I would be expecting a new level.
You know, I'm actually looking for for the flag pattern, just the way the flag plays out. It points to 143 for just a bearish flag.
Okay, so that's then pretty close.
Yeah, that's really close.
And equality level of the first leg down. Yeah, so actually, and this could, I mean, pound has been probably one of the weakest of the last, what, two months?
Yep.
One of the weakest currencies, I think, out there. So, and with very poor CPI data today, everything just came together so perfectly for this pound yen sell-off. You know, we had also, if I just give a brief overview here, we also had stocks trading higher in the last 2 days after that gap up, but notice that there was still room for wave C or wave 3 to the downside, which is happening now. And we had also 10-year US notes turning up, and we had bad UK data. So everything actually came perfectly together for this pound yen weakness to play it out actually. So and I think that there is room for more downside actually. And the next thing that I want to talk about is crude oil. I think that crude oil is trading at some very important resistance levels here. We see also 5 waves higher here from June 2017, and we are at trading close to $73 per barrel. This is my technical resistance actually. So what I'm expecting is a 3-wave setback, and this 3-wave setback again could take us back to the area of a former wave 4 or even termination point, which is around 60. Okay, so there's very big risk that there will be a pullback coming. And also I can see that some are already calling crude oil going to 100, but those are maybe analysts that were quiet when oil was trading around 50 or 45. So I think there is sentiment that is very bullish sentiment that is showing up now, which I think it's a little bit late, right? So definitely there can be some pullback coming. We have also potential wedge formation here. And if you look at this structure, that is the price that is rising up from March lows, it's really not that aggressive and extended like in the previous legs, right? So to me, this is an evidence that bulls are losing strength and that we could see a reversal to the downside in the next, let's say, few weeks. So definitely, from a trading perspective, it's a little bit too soon for shorts, but definitely too late for any long. So I personally, I'm waiting on some aggressive drop, maybe 5-wave fall on hourly chart. If we go back to $70 per barrel, then I think that pullbacks could be very interesting.
Yeah. Now, yesterday, just the price action in the crude oil market yesterday, we hit a new high and then we reversed to lows by the end of the day, setting up a potential false breakout as well.
Actually, I really want to see what was the candlestick formation.
It actually is a potential dark cloud cover. So if we close today lower, then that's a bearish sign for crude.
This was on Monday, right? May 21st. We have seen a break to the upside, and if we erase this whole Monday candle, then I really think that we could be headed lower.
You bet. That's it. That's exactly right. So yeah, crude's also on your radar. Now, are you looking at other yen pairs too? Like, I mean, I know we looked at the dollar yen, but how about like the euro yen or any of the other yen pairs?
Yes, actually, I have been looking also for a turn down from that resistance. It turned lower actually a little bit earlier, but still there is room for down to 125 actually. We just broke these lows, as you can see. So if we close below these lows, then I think that we are headed lower. It looks like the most aggressive sell-off since market turned down in February, right? So I really think there is room for more weakness here. Also, ASEAN is very interesting because here on the 4-hour chart, if I make the wave count here, it was a clear ABC recovery, and now we are falling impulsively. So watch out for a daily close price, and then maybe in the next 2 days, watch out for an ABC rally. I think this could be also a very interesting pair to look for more weakness after a pullback.
Yeah, these yen pairs really, and they really are, they tell the story of what really could happen to equities too. I mean, you know, and one of the things that I've noticed, and I know you've probably noticed as well, Grega, is that we haven't seen the normal correlation between, you know, yen and stocks as of late, because the yen has been moving with the bond market. But if stocks continue to sell off, this could be a tailwind for the yen alongside bonds as well.
Yes, and I think that this is correct, especially because if we take a look at the price action today, both S&P and dollar yen, or those yen crosses, crushed exactly, we're trading exactly the same, tick by tick. So clearly, if there is room for more weakness on stocks, I think that yen is really has legs for much more upside. But we have the FOMC today, right? So
we have the FOMC meeting minutes. Yes, it's the minutes, not the FOMC, but still, you know, when you look behind the curtain and you can hear what the Fed has to say regarding rates, you know, if everybody's expecting the Fed to be fairly hawkish, you know, how about if the murmurings or the comments behind the curtain are not as hawkish as we expect? I mean, you could have a, you know, straight up reversal in the dollar too. You know what I mean?
Yes, and we have seen this plenty times in the past, right? So you never know, right? So
no, you don't.
We have to be careful, and especially because of the FOMC, that's why I highlighted so many times that watch out for a daily close price, right? Because this will be after the reaction to FOMC. So I think this will be the key for the direction on Thursday and Friday. Also, what I wanted to highlight is Aussie dollar. I'm watching this one also very closely. We have turned lower from these key resistance levels here, and again, a decline is quite aggressive. It take us back into this previous triangle range. So it looks like a top formation here, which means more weakness could be following, especially if we break decisively below this triangle extended line. In such case, this flag formation actually, or zigzag if you want in Elliott wave terms, could send prices even down to this, what was this? This was May 2017 low, so actually a year back. So I would not be surprised to see Aussie even weaker. But again, we are at the gold. I'm not sure what gold will do, if gold will stay sideways or break to the downside. I think that Aussie is the one that you should watch for in terms of a strong dollar pairs. If you want to be, if I want to look for maybe still for some dollar longs, then probably Aussie would be my my first choice here.
That's, you know, and with the tensions that are surrounding the U.S. and China, I could see that, you know, the Aussie, I think, is going to be in the crosshairs of most traders, especially from a weakness standpoint. Hey, speaking of which, speaking of trade, I've been completely lost with the dollar Canadian. I honestly have no idea what to do with it. I personally, and everybody knows this, I'm personally just waiting for some NAFTA headlines before I trade the Canadian, which could end up being, you know, not even this year for all I know. But the dollar Canadian has been very tricky. Do you have any view of the dollar Canadian?
Probably it was tricky, probably because dollar Canadian lost correlation completely with crude oil, right?
Yeah.
If you would ask yourself, or if someone would ask you, where you think dollar CAD will be trading, I don't know, 1 year back, if you would knew that crude oil would be trading around $70 per barrel, probably you would say that, I don't know, that we are going to see maybe
125
or even lower,
right?
But we see higher swing highs and higher swing lows here. So and if crude oil is really we'll see a pullback that I talked about earlier, then I think that this is the time when dollar CAD could still bounce, because if dollar CAD is strong now, even when crude oil is bullish, then we can imagine that dollar CAD can be even stronger if crude oil will turn to the downside. And if you respect the price action that crude oil, when crude oil actually turned from a new high, as you said, it made a fake breakout higher and then turned. This is exactly actually when dollar CAD also showed its strength after reaching this, previously reaching this swing low here, actually support around 1.2740. So actually, with more weakness on crude oil coming in, I think dollar CAD could see actually more upside.
Okay, all right. Well, especially if that correlation takes hold, and if we continue down the road of not having a NAFTA agreement, I see that as very, very possible in the market. That's for sure.
I mean, for the short term, I think that we could see a retest of these March highs. Maybe just a spike, but for the short term, I would not be surprised to see prices at these levels.
Very good. Very good. Awesome. Well, Grega, did you have anything else that you wanted to mention?
Not really. We covered quite a lot here. So if there are any questions, I have no problems to look at it.
Yeah. Do you look at the do you look at the Nifty 50?
Nifty 50. Okay. Just let me look if I have it here. I will take a look on trading view. So actually the longer term, okay. Well, this sell-off currently looks quite aggressive. So what I see here is that we are probably going to see lower prices within wave 4.
Yeah.
This was quite interesting double bottom here. So maybe, or at least 10,000 is also psychological level. So I would not be surprised to see retest of these levels. Let me check 38.2%. This one is coming also around there. And what is really interesting is that we had a sharp wave 2, right? And normally when you see a first correction in a 5-wave sequence that you're tracking, a sharp one like this, then you can expect that a bigger correction of the same degree, which means of a wave 4 in our case, could be more complex. Okay, so if this one is sharp, then this can be more complex. If this one would be complex, then the wave 4 could be sharp. And in our case, I would be looking for more complex, and I would not be surprised if we are still going to see lower prices here into wave C. Okay, yeah. So it can be longer in time correction and maybe deeper in price as well. As it stands right now, I think that there is room for more weakness, and once we see a new swing low, I would be watching out for a reaction, how market actually will respond at this potential support zone here.
Awesome, thanks, Grega. Hey, there, got a question from Musi, I don't know if I just completely messed up that name, but anyway, looking at the Aussie New Zealand, and you know, I've been looking for the Aussie New Zealand to pull back a little bit, but it's been extremely resilient. It hasn't pulled back at all. It's I know you keep a count on it, and we're still holding well above the 200-day moving average. What do you see there?
We are moving into this 61.8% retracement of this previous decline that occurred from October 2017. There's also resistance, previous swing high above there. So I think that there can be a reversal coming, and as you said, and maybe even a really big, strong one if we consider that there is possibility that we are in a big and final leg of this triangle consolidation. Okay, so really, this is a really big picture. Okay, so
that I didn't expect to see, but that would be pretty epic if it broke down like that.
Yes, you know, Elliott wave theory is fractal. If I showed you 5 waves of recovery on crude oil, right, on a 30-minute chart, then of course, because Elliott wave is fractal, we could also see a same 5-wave movement on a higher degree time frame, like a weekly chart. So it's same thing with Aussie against New Zealand dollar. You know, so technically speaking, if you are familiar with the Elliott wave theory, there's no other choice to label the wave count like I did. You have first leg down, wave 2, another sub wave 1, sub wave 2, and then clearly, as you know, the most extended and powerful move is typically occurred in wave 3. So this should be wave 3, right? Which means this was wave 4, so we are now in a higher degree of wave 4. So theoretically speaking, also, we are moving sideways. We are not in uptrend, we are not in downtrend since for the last 3 years. So it's consolidation, and I think there is a chance that we will see a reversal to the downside, but still there is room to test this upper side of a trading range, because after all, we are still in a trading range, right? So
got it. Yeah.
So pullback can occur. Maybe it will still be wave B coming like this, and then we see final stages for a wave E and then turn to the downside. But once we reach this upper trend line resistance, I really would be careful there.
Great. Okay. Well, I'll be very careful being long up there. That's for sure. Hey, one last thing I've got to ask you, because it was brought up by oh crap, who was saying, but somebody had mentioned the Turkish Lira, and obviously the Turkish Lira has been a runaway freight train. Well, at least the dollar against the Lira has been, and we've seen this just massive move higher. I have no idea how to analyze it when you get a blow off kind of top that we're seeing. Do you have any view on the Lira?
I'm just looking at it.
Yeah, I mean look at how massive that move is. I mean
it looks like a Bitcoin in 2017.
It does, doesn't it? I mean, it's gonna stop somewhere. Obviously, you know, for me, it's hard to figure out where moves like this stop, especially when you go past so many extensions at this point. You know.
I would be waiting on this market to make.
You kind of got to let it. You kind of got to let it show its
structure, actually.
Yeah.
At this stage, I just think we need more price data to see if this is really a big deal here, or it's just another very strong spike and we will see immediate reversal back lower. But still, I think that there is a fifth wave that is in progress since September 2017. So actually, if someone would love to be long here, then still you would have to wait and see on this wave for definitely no chasing here at these prices, these levels. So watch out for a free wave setback on the lower time frames, and then maybe try to ride the trend. Because at the moment, definitely.
What we have done is we've blown past the 261% extension in the liras. So I can't even begin to. I would assume that we're near a top, but I could have said the same thing yesterday. You know what I mean? So
yes. What is really interesting that wave 5 can make a 61.8% because wave 3 is extended leg usually. Then you have a wave 5, which is normally obviously shorter than wave 3. And from Fibonacci perspective, it's usually around 61.8% of wave 3. Okay, so I took distance of this wave 3, black wave 3 extension, and if I project it from end of wave 4, the 61.8% is around here. And also 5.0, I think it's psychological round figure as well. So I would be very careful up there.
yeah, okay. All right, very good. Well, Greg, I appreciate all your views, and is there anything else that you wanted to share with people before I take back over?
No, I think it's okay. I will definitely join again tomorrow and on Friday when we have some new developments in the market. So
awesome.
Hey, Greg, I have a question for you. Do you know why Elliott waved?
What was there?
Why did
this is going to
Elliott?
be a very bad. This is going to be a very bad.
No, it's going to be a very good one. Why did Elliott wave?
Why did Elliott wave?
Because he was impulsive.
Oh my God. Oh, Dale.
That wasn't bad. Come on,
Dale. All right.
And his wife was corrective. You know that one guy, right?
Oh my gosh, that's
All right.
horrible. All right, thanks, Dale, and thank you,
welcome,
Gregor, for spending the time. We'll look forward to seeing you tomorrow as well.
Sure.
All right. So guys, I was just looking. When I was looking at the lira, this is like the weekly. This is the weekly chart that I have, and this is the 261% extension of this move, and obviously we blew past it, and again. I would have said yesterday that we were probably overbought. Today we're more overbought. We're extending, and I would, if I was trading the lira, which I'm not, but I know there was somebody in our chat room that was trying to trade the lira last night, and actually I don't know how they did, because they were trading the Euro Turkish Lira. Yeah, they probably got stopped out because they were trying to fade that last night. And I'm like, you got bigger, stronger stomach than me. But anyway, we extended past the 261% extension. I would wait for some sort of technical candle to show a reversal, because then if it does, where you can manage your risk. You can say, okay, I know people are probably thinking trading counter trend, and I'm just saying that if I was to do something like this, I would just wait for a counter trend setup, and then look to go, with a hard stop. That's the only way I would do something like that. But the Turkish lira just continues to rally. So very interesting moves, guys. You might have seen my tweet regarding the euro dollar. We're just we're on really critical support here. Got a little false breakdown earlier. We're just sitting around the major 38% retracement. Like I said, this is a really key support here. We are in a descending wedge. And let me get rid of this one. We don't need this line. We're in a descending wedge here, and we'd have to break all the way back above 118 for the euro to really 118.30 actually which is the 38% retracement from yesterday. We'd have to break all the way back above here before the downside pressure comes off. But I do think there are risks, today. Of the euro dollar potentially putting in a reversal. The pound is trying to respect this 161% extension. Again, the Aussie and the Kiwi are actually performing better the European currencies. So the Antipodean currencies are holding up a little bit better, and the dollar yen bounces have been very minor. I mean, and you can see the dollar yen just on an intraday perspective. That this is probably setting up more like a bear flag is what I would think. You know, just looking at the intraday charts of the dollar yen, this is what I see. So I wouldn't be you know, trying to get bullish the dollar yen. I think that any move above 110, you know, is going to find some sellers here. So and remember, we have, and one last thing I should mention about the dollar yen, we've broken out of this is an ascending wedge. We've broken down today. So it's bearish now. And so with that descending wedge breakdown, probably looking at, you know, prices closer to 108, you know, before we see 111 again, we'll probably see 108. So the dollar yen looks like a pretty strong reversal at this point. And I think that's pretty much it. I want to also again, I'm gonna reiterate, guys, if you are not happy with your broker, make sure that you hold on really quick. I don't know why this is taking so long. Make sure you click on that link that I put in the chat box, which is the referral or the reimbursement program link. The reason why I put in that link is, if you're not a ForexAnalytix subscriber, you can join Forest Park's reimbursement program to help assist you to get ForexAnalytix for free. Also, if you just for a contact, if you want to contact the Forest Park FX, and they can just guide you in the right direction, no matter if you're in the U.S. or you're in Europe, make sure that you click on the link that's at the bottom of the reimbursement program page. The contact information right here. There's a Skype. There's the email address, and make sure you click that to talk to one of the guys, the principals there. They pick up this this email. So that's either Trent or Justin will get back to you. And if you and remember, they are our webinar sponsors. So they're the ones that make this webinar happen. So help us help you by getting in touch with the guys at Forest Park FX. And Dale, is there anything else that that you wanted to mention before you bring on your guest today?
Yeah, I found it interesting. Greg's count in crude kind of lined up with what I've been talking about a few days, and kind of what our guest Raksha Soni showed, a harmonic time analysis that crude was due to peak in here. So, you know, if you didn't sell the top yesterday, you're not late. And there's some great stuff by Greg as usual. And Jared Johnson is in the house and ready to go for his interview.
Great. All right, sounds good. Well, I'm gonna let you take over here, Dale, and bring on your interview. You guys have a great trading day today. My name's Blake Morrow, and thanks for being here with us today.
Okay, Blake. Good hunting.
Thank you.
Hiya, Jared. I'm going to make you the presenter now, buddy. And looking forward to meeting you and talking to you. And I've seen your stuff before, so you're not a stranger to me.
There we go.
Hi, Jared. Hi,
Nice to
Jared.
see you,
Hey, great to have you here. Thank you for taking time today, Jared. We haven't done this together before, have we?
You know, we did actually, and it was, it's been a couple of years now. So
FX Street days?
Yeah, it was back in the FX Street days. It feels like, you know, 2014, 15. I mean, it's been a good long time. So.
Well, okay, it's good to be reacquainted, and just want to let you know that I've seen some of your videos, I've gotten your emails, and I like your work, and glad I reached out to you on Twitter. Why don't you refresh my memory and share with our viewers a little bit about the beginning of your journey and how you got started and how you got from point A to point B where you are now?
Yeah, absolutely. So at this point, I'm heading into pretty darn close to 2 wonderful decades of trading here. So
Wow.
got started back in early 2000s. So I'm kind of at the 16, 17 year mark, somewhere in there. And you know, like
are you starting to get the hang of it now?
I'm starting to get a feel for how this market goes.
Yeah, me too. I'm just starting to get the hang of it. So.
Oh, it's a tricky ride sometimes. That's for sure. That's for sure. You know,
so, wow, you're a veteran, man. You've been through many campaigns. You've been humbled before.
Yeah, and you know, and I'm still not without without the occasional surprise by the market, but you know, after a while, you kind of have seen everything, and so it's all pretty familiar to me at this point. But you know, in the process, have definitely developed some good habits and some good techniques to kind of just follow through with with most market conditions, and it's been good. It's been good. I have a trade group that I've hosted for at least the last several years as well, and I think several of them should be in here with us today.
Welcome. Let me ask you this. You have a trade group, so besides your trading ideas, I'm sure you're mentoring. Did you have one?
Did I have a mentor?
Yeah.
Yeah, you know, a couple of probably pretty unknown people back in the day that definitely helped me through the process for sure. So yeah, my first couple of years in trading, I shadowed some people. I had some mentors. I had some really good people to kind of help me, you know, learn the ropes and get through some of the trickiest parts of trading. You know, keep in mind, I mean, I know you've been trading for a long time as well, Dale, and you know, so many people, there's so many resources now, right? There's a million websites and educational material, and there's just tons of stuff even on YouTube. And man, when I got started, there was a handful of people that knew anything about this, you know, retail Forex business, and there were even less, you know, websites and educational material and so on. And so definitely a lot.
How would you advise people, since you said there is a great quantity of material on the net, to be able to judge between what's real and who are the charlatans?
Yeah, that's a tough one. That's a tough one because there are so many websites out there and so many groups now. But you know, I think in the age of you know, all the material that we have and all the, you know, fortunately there's enough really great online reviews about things, and you know, and YouTube and analysis people put out on YouTube, and the comments that can be, you know, kind of read through a little bit there. I would say a little bit of peer-reviewed stuff could go a long way in today's, you know, in today's material and business and so on.
Okay, so here we are, May 23rd, 2018, buddy, and you have the CAD Swiss up here. So I want you to talk to us about this setup and why you use what you use. Looks like you have a lot of pivots marked with horizontal blue and green, and I see a channel line and maybe 1 or 2 moving averages, no indicators. Tell us about your style.
Yeah, so CAD Swiss is just one that we've had a pretty good run on lately, but my style is very you know, in kind of testing out so many different things. I've used so many indicators and so many kinds of details, and I've kind of just tried to simplify it down. I love pivot points. I think they make for great targets to aim for, and I think they also help us really identify. I use, you know, right here we've got some, you know, there's some just weekly, monthly, daily pivot points. Nothing special, nothing too you know, too out there. And I think that these are so excellent for helping us to identify when a market's kind of getting overextended. So I love using them for targets, but I also, you know, maybe even more so like using these pivot points to kind of just help remind me when something might be getting a little out of balance. You know,
so do you color code your pivot points based on time frame? Like you said, the purple one's a daily. What are the green and the blue ones?
Yeah, so let me here. Let's go over here to a little bit of a closer up look. So so these are weeklies. These green ones are my weekly pivots. Those blue ones are the dailies, and then we got the big long monthlies right here. I don't look at yearly as much, but I just try to kind of keep that daily, weekly, monthly pivot point outlook on those time frames.
Okay, thank you.
And then I just use, you know, some simple moving averages, right? So just a 50 and a 200-day moving average, and I find that those, you know, the 200 moving average has kind of become a real staple for me, because also, you know, like these pivot points, it kind of helps us identify some trending markets, and it can do a really good job helping identify some, again, some overextended markets when trends are coming to an end, and when there may even be opportunities to start looking for corrections and reversals and some of that stuff. That 200 moving average is a really, really good one. Across many time frames, by the way. I'll look at it on shorter term time frames as well as pretty long term ones. And I've kind of run through a bunch of statistics and found some numbers across different time frames and different currency pairs that, once those areas are reached in relation to 200 moving averages. So, for example, how many pips the market might be from the moving average, and how long it's been, days, weeks, months, since the last time it hit. That can also be a pretty good indication of when something's kind of ready to start making its way back.
Interesting. So you look for regression back to these longer term moving averages. Okay, so we're looking at CAD Swiss. I see. Did you, after it broke down, was it your style to wait for rally back to test the channel breakdown to get shorted out, or do you short on the initial breakdown?
Yeah, so on this one in particular, honestly, I think it kind of depends on the conditions, right? It kind of depends on what kind of trend we're dealing with. So, if I'm trading something that's definitely in corrective mode and counter trend, I'm always, this kind of move right here is very common, right? A breakout, pullback, retest, and then finally that continuation. And that's how we traded this one, because we were, we're going against a pretty decent trend. This CAD Swiss has been heading up for a couple of months, and and we're coming into kind of this nice little, multi-year channel here. And
wow, what a large rectangle.
Yeah. And so that kind of got my attention. But there was other reasons I thought that the Swiss was a good one to be long, and CAD was good to be short. But exactly, when we're trading, personally, when I'm trading kind of against these trends, I let that breakout happen, and just like we did right here, we just let that happen. Got in on the pullback. Just traded a pretty simple breakout right here. And in fact, my whole group, we just got into this yesterday, and we're sitting on some pretty excellent profits, looking for kind of one final push down into this chunk of pivots here. But so it could be good for a nice little 200-ish pick run. But yeah, trying to let that kind of just work its way down and not get too overextended in the short term breakout.
Okay, so your handle is Day Traders FX. To me, it sounds like this was, I don't know, a swinger position trade. So is your focus day trading with occasional position and swings? Yeah,
so as with websites, right, we kind of have to take what's available. So yeah, but definitely do a good bit of day trading. So we're pretty focused on some shorter term trades, but absolutely we go for some position trades and some longer term ones. Here's an example of that. So in speaking about looking at that 200 moving average and so on, and kind of tying it in with some longer term trading, this Euro Swiss right here, another one. Obviously we've been trying to get long some Swiss pairs. This Euro Swiss had, here's my 200 moving average and some of these pivots down here. And we had kind of a nice little pattern, but this pattern was really more just for we were in long before the pattern ever got reached, right? So short long before the pattern ever got reached. So you know, as we started to get some high numbers on, you know, months and months, and even, you know, even just about a year since we'd had a visit to the 200 moving average, and this one I have some very specific statistics on, as well as some lower missed targets and so on. This was a really easy trade for us to kind of, you know, jump in here and just trade, you know, just trade some simple breakouts and some simple patterns up here, and, you know, same kind of thing that we're always looking for is just breakouts, retests, continuations down, and this one worked out really well. We grabbed some great profits on it. We're still in it, and you know, that's been a good little move from our entry point around 119.50. So you know, I kind of where my trading style focuses is I just love the simplicity of chart patterns and trend lines and breakouts, right? And a lot of people kind of poo-poo that, so to speak, right? Oh, you can't just draw a line on a chart and hope that, you know, something's going to go through. But I really just focus on those patterns, be it short-term or long-term. But a pattern or a breakout or a trend on its own is, in my opinion, not good enough, right? And so that's where I've kind of added these extra layers of probabilities, like, you know, high bar counts and so on in relation to a 200 moving average, and kind of a stack up of pivot points. And so these kind of add higher probabilities, so that if there is a breakout I'm looking for, I've got some major kind of targets and poles on that movement in, you know, whichever direction I'm trying to trade. So a lot of pivot points can be great. You know, this 200 moving average can be really great, but still it all kind of starts with that pattern and that breakout.
Okay, well, Jared, you know the business. This was a great trade, but what have you done for me lately? Can we take a look at something that you might be stalking and look at, instead of yesterday's newspaper, tomorrow's?
Yes, absolutely.
Okay, buddy.
So yeah.
You ever get that feeling you're only as good as your last trade, last week, last month, last quarter?
That's right. You know, trading's kind of like Hollywood, right? It's your last hit. So I'm well aware. So for sure.
You need to tell your followers that no one could make an assessment of anybody or anything until at least 90 days pass.
Yeah, no, that's
otherwise the search for the Holy Grail will be an eternal one.
That's for sure. We all have our great runs and our not so great runs. So
hey, I've always believed, I don't know about you, Jared, but the mettle of a trader is how he manages himself in the markets during a drawdown.
Absolutely. Yep. That's the true colors for sure.
How do you do it?
So, you know, I am a huge fan. You know, I always tell my group, and I always tell traders that I have found myself laying on the floor in the fetal position, drooling one too many times, right? I can't, you know, I've gone into trades thinking this is a sure deal, and I'm gonna make money on this no matter what. And then the drawdown gets out of control, and whatever I thought was gonna happen didn't happen, and so on. And those were, you know, those experiences spotted my early trading career probably a few too many times. And so, you know, what I really specialize in now is just, you know, just base hits, so to speak, right? I just want to have, you know, we get these nice little runs, right? And this was a great trade. The CAD Swiss has been a great trade, you know, and these have all been ones we've got into in the last day or so, and they're running great and doing everything's great. But, you know, the average market condition, right, just gives us, you know, we get a nice little run. We get 50 pips, we get 100 pips. Sometimes we get 25 or 30 pips. And I'm just happy to be conservative, keep my money management just so safe, you know, so safe, and make sure that I'm never, ever, you know, my whole goal is to stay out of trouble first, right? Because there's no need to risk more of the account than is ever a safe amount to lose, right? So stay out of trouble, then make money, then make some more money. And that's kind of always my method about going about things. And so, you know, I tell people, a lot of people come to my group and they come to me and they say, oh, I'm just blowing up accounts and so on. And my first advice is always just reduce your trade size and then come back and we'll talk, you know, because keeping good money management can really obviously keep us out of major trouble, but it can also help us participate in some of these big, massive movements that are hopefully in the works. I mean, to kind of talk about what you were mentioning here, where are some good potential runs coming, and these are, as far as I'm concerned, participating in the dollar trend right now feels a little too late, right? So if anybody out there saying, let's jump in, let's trade some dollar strength, I mean, there's still little pushes here and there, but it's kind of on the extended side for me to be jumping into it. So now I'm starting to look for some of these dollar pairs, pound dollar, euro dollar. Pretty much all the dollar pairs have this screaming for some correction movement, and so, but this kind of stuff's going to require scaling into positions and using very conservative, responsible money management, and starting to kind of build a position.
Okay, that's an interesting point, because I believe in it. So when you're scaling in, obviously you don't have a stop point because you're in and you're scaling in. That means you're adding as if you're long, you're adding as prices move lower. How do you manage the risk? What do you determine is because normally if you're scaling in, you're going to have a piece on early, maybe another piece on, and maybe another piece on. How do you manage the risk on a scale in?
Yes, that's a good point. And so, what I always try to do in the very beginning, of the scale in, right, is I try to, identify that area that I would potentially need to make a hard decision, right? And so maybe that's 200 or 300 or 400 pips away. And so I kind of, place my first trade in kind of relation to that area, right? If this, here's the pound dollar. I think the pound dollar is going to be an interesting one. We've had a big run off these highs here, and I know you guys, I saw in the last part of the webinar there, you're looking at some fib levels and some extensions and so on, and I'm watching all of that stuff as well. But I'm looking at this and I'm saying, okay, if this pound dollar is ready to make a bigger push down, wherever my scale-in point is going to be, I need to give it kind of the widest berth, so to speak, that I can. And for me, the first level that started to get my attention just a little bit to get long here is about 133. So how much lower might this go? Where could we see this pound dollar headed? We've got all these. We've got all these levels, and it's definitely making some breaks through this, through this little zone here, and it's, it's heading through all of that. So I'm not going to try to get into this thing before I have a little bit of upside confirmation. So I'm definitely not trying to find any bottoms or anything. And for me right now, I'm kind of watching. I'm kind of just, I'll kind of continue to readjust, some of these trend lines and start to kind of look for just where that breakout and where that slight bullishness will start to confirm. And so that's where my first kind of scale-in is going to be. And basically, I'm going to give that first position 500 pips of money management room, right? So just a big, large number so that I'm not going to be putting myself in any kind of risk. And the way that I scale in, a lot of people will scale in on, every so many pips, every so many levels, every, percentage points and all of that. And the way that I look at kind of building a position or scaling into something is if there's a setup, if I get in, let's say I get in long pound dollar, at this little breakout right here, this thing starts to consolidate at this nice little support level and starts to make a break. And let's say, I'm just going to get in right there, just hypothetically. So my scale in will depend on this making other moves and other setups that I would want to get into if I weren't already in. So I don't have any kind of dollar percentage amount that I spread these entries apart. It's just simply where is the next best setup. And of course, I'm keeping in mind the whole kind of range of how much risk I'm going to take on this whole trade. But it just simply comes down to here's a breakout. We've got a lot of high probability targets up above. Maybe this makes a big double top and breaks above that. Maybe that's where I put another position in. Maybe it makes another push down and creates a falling wedge and breaks out of that. I get in there. So I'm just simply getting in when I scale into a position at another point that I would take if I weren't already in the trade anywhere.
Okay. You know, I would think I think one of the most frustrating experiences for traders is to be right the market, wrong the trade. You know, I know it's happened to everyone. It's happened to me. How do you teach people to avoid it? Is part of your strategy of less leverage one way to do it, and to give your trades breathing room, at least perhaps a daily ATR?
Yes, absolutely. Yeah, and that's really the, you know, right the market, wrong the trade is just the best saying, because I think so many, you know, so many retail traders, like everybody out there, right, is I think more people are right than wrong on the direction of the market. But you're exactly right. It comes down to these entries, and it comes down to, you know, I think we all get a little too focused on, you know, here's a 25 pip trade and a 25 pip stop and a, you know, and a whatever. And it's hard for me to think that is, you know, an effective way to try to kind of beat the market, you know, really be so precise and so precision based. And so, yes, absolutely, you know, looking for daily ATRs, looking for just simply scaling in and building a position and waiting for, you know, extreme levels. You know, I mean, for example, these dollar pairs, right? We've seen this massive.
Yeah, coincidentally, while you're talking, Jared, I'm getting a reversal candle in the Dixie on the 1 hour time frame after making a new high. Looks like a stop hunt to me. You know, where you take out a previous high by a few pips, shake out all the shorts from late last week, and maybe now we get a turn. But getting an indication of that right now while you were talking about it, and bringing up cable for a possible buy. So
yeah, and so
yeah. So your intuition is with mine now too. You know, late to be short the dollar. I mean, long the dollar, looking for short positions in here. I think we're setting up here. So
yeah.
Interesting interview, Jared. Yeah, for people that would be interested in learning more about you and your services, this would be a good time to show your website.
Yes, everybody can come on over and pay us a visit. We've got some great material over here at daytradersfx.com. So I've got a little free trade course everybody can check out and get a couple of tips on, you know, some of the material we talked about, how to kind of keep yourself out of trouble in some of these trades. So you can head over there and check that out. You can also get a free trial to our trade group. 14 days, try it out, see how we're trading all of these dollar crazy trades that are coming up. That hopefully, I think the dollar is going to be the big trade of the next month or two. So let's be ready for that one.
Okay, so what hours is your trading room open?
We're 24 hours, but we're definitely a little more active around the U.S. session, and then the UK Open, U.S. Open is where we're really focused.
Okay. Do you sleep?
Well, I also have a new baby, so not really.
Oh my God, you don't sleep. Okay. Well, Jared, really a pleasure. You know, maybe this is going to be interesting timing for this interview, that near an inflection point in the dollar. And I encourage people to check you out, and at the minimum, follow you on Twitter and check out Jared's website. It's the same as his Twitter handle. His Twitter handle is at DayTradersFX. So your website's probably www.daytradersfx.com, correct?
Yep, sure is.
Okay, Jared, thank you so much for your time and being with me near possibly a dollar high. And I hope that pips rain down on you and whoever your teachings and words and charts touch in the coming days, weeks, and months.
Thank you, Dale. And always great speaking with you. And I wish you the best of luck as well.
Thank you, my trading warrior brother, Jared Johnson. Everyone, that's a wrap. So
Thanks,
possible little turn. The top in crude is just beginning. I'll see everyone tomorrow for investing.com Thursday. Enjoy the rest of your session. You could always join Blake in the members chat after we end here in FACE. And most of all, don't just count your pips, count your blessings. See everyone tomorrow. Thank you, Jared.
Take care, Dale. See you guys.
Okay, buddy.